Hey traders, this is Blake Morrow with Tradersummit, and it's been a while, Beat, but it's been a few months, but I have Beat Nussbaumer from FX Beat here. How are you? Good to see you.
Hi, Blake. How are you? Not too bad. Yeah, it's been a while. To be honest,
It
it's
has
always
been a
been.
while, and I know it's been a while, and we've seen a lot of volatility. So I think
Yeah,
there's a lot for us to catch up on. I want to first of all say welcome back, and I
thanks
do
a
want to
lot.
mention to the traders out here, we are just a day away from the non-farm payroll, but you're going to be watching this after non-farm payroll. So, a Beat knows that. Although I do really want to get his views about how he feels about non-farm payroll. So,
Uh,
how do you feel about the markets in general and where we're at and what we're dealing with?
yeah, to be honest, I think we obviously been talking a lot about this year, earlier part in the year of the sort of view about the higher dollar and the dollar move that we both probably expected to see. Um, I was clear. So the last few weeks, I started to feel a little bit of a change. I'm not turning bearish dollar. That would be maybe too much be said. But you know that last year being probably one of the first really hawks on the Fed, the dollar interest rates, blah 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 blah. And I think now it just feels we now come full circle. So all the people that didn't subscribe to the dollar early in the year, or like that, actually neutral rate could be higher than people expect.
Yeah.
Uh, now we had this big move in the dollar. The Fed has turned a lot more hawkish, but really this is just to tick their boxes, right? So now they're all like talking hawkish just in case, right? So as much as people may not have believed it before, now they almost like overbelieve it, if that makes any sense. Probably not even a word, but it's like, so now no one is really going against them, right? Which, yeah, you know,
Right.
right? So what I mean by that is we've done a really strong move in the dollar. We started to price in a lot of the stuff. We priced in a lot of the hikes that are out there. I think we now already had like 2, 3 moments when I call it the peak hawk, when we just had like everyone speaking hawkish, and we wait for more hawks to come, and there's none, right?
Yeah.
And suddenly the dollar starts to suffer a little bit. And I think maybe this parity move in the euro, maybe you go there again or whatever, but then it's probably more the reason for Europe and Ukraine and stuff like that than the actual dollar move.
Yeah,
Uh,
and you bring up the euro, and I mean, you obviously live in the UK.
yeah,
You're European, by ethnic background, if you
by
will.
default.
But I guess the question is, do you think that the ECB could really act and keep up pace with the Fed, or I mean, is the interest rate differential is going to continue to stay really wide? I mean, the ECB has so many, a plethora of issues that it's got to deal with as we
Yeah,
go into the fall.
yeah.
So, are you convinced here that the euro below parity, that was a one-time event, or do you think we could actually trade below parity
To
for a
be honest,
sustained period, I guess?
yeah, no, it's a very complicated issue because the euro is a very complicated animal, as we know.
Yeah.
I refer back to the Greek crisis in 2012-14 window, when the euro could have probably gone to 90 cents or wherever, and it just couldn't really go below parity, or 103, whatever was the low. Uh, since the only time it really sold off was after the inception, when the euro went to 84 or whatever it went in 99, 2000. Um, but after that, the portion of reserve currencies in the world, the way China shifts their reserve from dollar out of dollar into euro, from euro into dollar, all these kind of bigger macro gains from sovereign wealth fund, it just has created a sort of almost like a sort of safety net for the euro, just somewhere around parity, because it's like people go like, yeah, parity, give or take, it's going to
Yeah.
be the low if you work on a 10 or 20-year kind of horizon, which obviously we don't, but they do. And
Right.
so I think I've always find euros is should have gone a lot lower. On many occasions it didn't. And so I'm a little bit careful. But on the flip side, we have elections in Italy, September 25, Draghi out, right? So that's a very bearish event in Europe, on top of all these gas shortage stories, blah, blah, blah. So
Yeah.
we have a lot of risks out there in the year. Even more surprising how quickly we came back from parity, because to be honest, we could just name many, many different stories that in itself are all being good for a move low in the euro. So there is something going on below parity, no doubt about it. But I also think that this is now a game between what do we really think about recession, right?
Yeah.
Do we actually, is the fast rate hikes that we have everywhere really the sort of a direct move into recession territory? Is that the only way for central banks to stop what some worry are the 1970 type of inflation risk? Maybe it is, I don't know, right? But what I would say is the ECB is definitely not as flexible as you might have thought a few months ago. Suddenly, there's additional problem coming. Okay, they made this new instrument for in case they have to intervene in the Italian bond market, right?
Right,
So
another acronym.
Right.
Correct.
Yeah, and at the same time protect the peripheral spreads, right? Which is yet another task they have. So it's a very complicated affair. But I think they might actually just get lucky, because at some point here, whether the US at the end hikes 50 basis points more or not from where we price it, I don't think that creates another big wave in the dollar. We see it. I see it in things like dollar rand, dollar max. People kind of go like, you know what? We're all on the same cycle. We're all hiking rates. Those guys all hiked rates a lot. We do a bit of carry. So the sensibility seems to be, or the sensitivity, I have to say, has sort of gone away a little bit. And we had another round of hawks like this week from various Fed speakers. And it's almost like while it happens, yields quickly go up, the dollar goes up. But as soon as it stops, everyone goes like, okay, we had like 8 Fed speakers. They all talked hawkish. Okay, right? It's almost like overdoing it. So I do really wonder where, and let's not forget, 10 years like 270. It peaked in 350, right? That was the reason why I suddenly started looking at dollar yen and go like, you know what?
Well, that brings up another point. I mean, from your from our conversation, what you're saying, it sounds like you're not really in the dollar can go much further camp. So let's talk a little bit about the dollar yen, because the dollar yen has obviously been on a rampage. The last time we spoke was in April, and the dollar yen just came off of a massive move from the 1-teens up into the 130s, and it just came off like a massive move. And but we've been consolidating a lot here, and so what do you make of the dollar yen at current levels? Do you think it's going to stay bid and eventually trade over 150, or do you think we trade back into the 20s? So what are your thoughts here?
Personally, I think the dollar yen is more or less done. I think we just went almost to 140, 139 and change. We had a very brutal sell-off now down to 130 and change, like in these last few days, which is probably typical for August. These sort of, when you get the position moves rather than the macro moves, right? So
position squaring moves, right?
EPA types that had to bail out of some dollar longs. I heard some exporters as well. But I think what you have is 10-year US yields hit almost 350. We're now 270, right? So in theory, dollar yen hanging there at 137, 138 was just too high. So we backed it up with the yield moves all the way up, and suddenly we go like, we don't care that 10-year drops 50 basis points. So I think it was the perfect storm. The Fed a bit more dovish on the presser, yields coming off, and August, and markets suddenly realize, there's just nothing around in the next few weeks that could push the dollar back up, and that sort of started the sell-off. But in itself, I think we probably have reached peak rate, and at some point, and this is the key question, I felt that the BOJ will blink soon, right? So maybe Kuroda doesn't get his way all the way to the year end to not bail out of this yield curve controlling the 10-year, which is a crazy policy when you look at global inflation. So I find it very hard to believe that Japan, of all countries, doesn't have an inflation problem, but there you go.
You get the information that they want you to get. So
yes. So now the key question is, so for Kuroda actually needs other countries to go into recession, so he can go like, glad we didn't hike, or glad we didn't do too much, right? If the US misses a recession, if the data in the US is hanging in there, the credibility of the BOJ starts to get really shot to pieces. So in the short term, the bond moves we've seen now, these sort of comeback and lower global yields on the basis of worries in Europe, worries in the UK, worries elsewhere, So they just sort of got away with. If these yields would have stayed big, I think they would really have a trouble. And so I think dollar yen is going to stay in range. It still makes sense to sell yen in a way because of the real interest rate differential. But it's probably not the one anymore where you just buy every level. It's becoming more like a value issue as well, a range, exactly. And then it's going to flip, and BOJ is going to flip, right?
Got it. Well, one last question I'll leave with you, since you do live in the UK. You got the sterling. It just moved pretty aggressively after the Bank of England raised rates. They cited a recession upcoming. The sterling sold off. We kind of bounced back. We're trading between 121 and probably like 122 at the moment. But I want to ask what your views on the sterling are, just because obviously you're going to have a new prime minister coming up, and the Bank of England, are they going to be able to stay hawkish in light of a big potential recession that's going to hit the UK? They got problems of their own. So how do you feel about the sterling and where we trade now, just above 120?
To be honest, I've been bearish sterling all year, and I selected the UK as the prime example of stagflation. I think the Brexit issues are completely underreported because there's just a sort of like you're not allowed to talk about it. I mean, talk about it, you're like a scaremonger, right? But the reality is, if you speak to the businesses, there's just a clear disadvantage, without a shadow of a doubt. Over the long term, 5-10 years, who knows? But right now, we have a double whammy. We have COVID, like everyone else, or the aftermath of COVID, but we also have Brexit, right? And there's clearly, the ONS stated that I think the UK economy shrank 5% of GDP because of Brexit. So it's actually a fact. So what we have now is really the crap of both worlds, so to speak, right? So we're always at the losing end of everything. I haven't seen much where Brexit really creates more business in the UK. So as you rightly point out, we have a head of the Bank of England that I don't really rate very highly. I think he's not really up to it at that point. Some of the communication this year has been horrible. I don't want to say they should have lied today about the recession remark, but if you hike rate 50 basis points and you tell us you go into recession Q4 for 5 quarters, right? I mean, come on. Even the last guy realizes, oh, isn't that stagflation? Yes, actually it is. I think the political mess is a very big mess. I think Boris Johnson has destroyed a lot. I think all these sort of promises that are made now from Truss and from Sunak, it's just laughable at some point. So I much rather had like fresh blood coming in to actually look at it from the outside and just go, you know what, this is how it looks, this is what we have to do. Now it's back to party politics, so not the best of the country, but best for the party, which has never been a good thing here anyway. So personally, I think, as I said, the UK is a prime example for stagflation. Sterling is going to be under pressure. Whether you have to play the crosses or you have to play the cable is a bit of a dollar issue as well. But I just
I was gonna ask you what's your best way to express.
To be honest, I traded the euro sterling today for the event because I just felt the dollar looks a bit wobbly at the minute, and I didn't trust that cable could really sustain a downside break because the dollar is in this corrective phase. And I think August, to be honest, like mid-July, I thought like, okay, we're going to get a big dollar correction in August, as we always do when we wash our positions. We got it in dollar yen, but I also thought the euro could shoot up to like 103.5, up to 105.5. And somewhere in the back of my mind, I still have that. But that doesn't yet mean that I draw my conclusions for the rest of the year. I want to see this dollar correction. The market is long dollar. Come on. Right, and so a bit of a shakeout in August, which is typical month to do it, would be a good thing. And then into September, we could really see what this is all about. Right, maybe cable is lucky, gets up to 22, 23, whatever. But I think there is no reason to be long sterling, not at all. All right. And I think, we both look at charts as well next to the macro, right? So in the short term, you just always place the sterling that looks best on the day or on the week. And then maybe come second week of September, when people are back from holiday, when we go back from maybe more technical into more macro trading again. We know what the story is, and then you start to really see, you know, is the dollar going to have another leg or not, and so on and so forth. So to be honest, I'm very tactical. I'm very flexible. I trade the market right now more than I have stale risk, because I don't see a lot of value in stale risk right now. The story is flipping too quickly, right?
Yeah.
One day we you know, yields going through the roof, and the next it's like, oh, it's the worst time of the, you know, ever. And I think this is just leaving a market in a very big vacuum over time. And I just see, to be honest, I'm trading the market since July, August. Mid-September, I take a decision whether to flip back into a bit more macro, or if the situation remains as it is, that you're actually better off following those weekly stories than trying to have the big view where this is all going.
Well, that's why we call you the Macro Beat. So, Beat, I want to say thank you so much for spending your time with us, because it's always refreshing, you know, to have your views. I love having these conversations with you. How do I find out more about you as a trader?
To be honest, I mean, I think when you send out your stuff, there's a link to the Macro Beat that brings you to my website. There's a link there where you could have a free trial of my sort of chat rooms or product. You can as well just take, you know, contact me there with whatever questions you have, and you know, always happy to have a chat and see how I could help people out there.
All right, Beat. Well, thank you so much for spending your time with us. Folks,
Thank
if
you
you
so
like
much.
what you hear here at Traders Summit, make sure you give Beat a big thumbs up. Subscribe to the channel down below so you don't miss any of this exclusive content. Have a great session, and I want to catch up with you way quicker than 4 months next time.
Yeah, we should do. We
All
should
right.
do. Thank you so much for having me.
Take care. We'll talk to you soon.
Thank you. Bye. Take care.
Hey traders, Blake Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like, share, and subscribe to our channel. Also click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.